Disruption to the value of stablecoin Tether could collapse the crypto markets, according to former CFTC chair Timothy Massad. In a Bloomberg op-ed, Massad compared the hypothetical event of Tether's value falling below $1 with the Lehman Brothers Reserve Primary Fund breaking the buck in September 2008, the day after the bank filed for bankruptcy. Joining us now is Timothy Massad, senior fellow at Harvard University's Kennedy School of Government. Welcome, Timothy, to the show. So we've seen a run-up in crypto in the markets over the past couple of months. Do you think Tether has something to do with it?
Well, I think, as you all have said, Tether is very important to the plumbing of the markets. It allows investors to easily move value from one exchange to another, from one crypto coin to another, without converting back and forth into fiat. So it has become very important, as indicated by its size. And that's why I think it deserves closer attention.
Chairman Massad, you said one of the big concerns in your piece, and one of the big concerns about Tether is that things go wrong, of course, when its assets on its books go south, should that happen.
Right.
But the thing is, we don't really know what's on Tether's books. They don't really publish, they didn't publish
right.
the quality of the commercial paper, and yet that's a majority
right.
of their assets. So how would there be a run on something if we don't actually know that their assets are down?
Good question. It's just if people get concerned about it. You're right that we don't know enough about what its reserves are, what the quality is, and we should know that. I mean, something that's going to call itself a stablecoin or market itself as such should be, in my mind, disclosing a lot more information about its reserves. You know, the Financial Stability Board, the global collection of regulators, responded to Facebook's announcement or proposal of Libra by developing some principles. And they said no global stablecoin should be allowed to operate unless it meets these basic principles, which had to do with reserve disclosure and management, risk management. Well, you know, the fact is the horse is already out of the barn. The FSB doesn't seem to appreciate that. You've already got Tether, which is a global stablecoin, operating without making sufficient disclosure. Now, the little disclosure we have is largely due to the New York Attorney General's office bringing their enforcement action a while back over affiliate loans and so forth. And so the New York AG, to its credit, has required some disclosure, but you know, it doesn't really have the power to require enough. So Tether has disclosed basic categories of assets, like 50% commercial paper. But what is that commercial paper? If Tether really is buying 30 billion of high quality commercial paper, meaning the most highly rated commercial paper, traders at major institutions would know. And I'm not sure that's what they're buying.
Do you think that it could be, for instance, they're buying the commercial paper of related entities or people that they may have interests with, and they may not be?
I don't know. I don't know what they're buying. I don't think we know enough. We don't know enough about what the loans are that they say they've made.
One of the things you brought up was the regulatory aspects. What can the United States regulators do? What can they do with the dollar,
sure.
the dollars that Tether actually holds, the few that they do hold, that would cause a change in its use as a dollar-backed stable, or at least a dollar proxy?
Sure. Well, you know, as I've said, we need to enhance our regulation of the crypto industry generally, not because I want to, limit it, but because I think regulation will, over the long term, provide for better growth opportunities. So in the case of stablecoins, we need more disclosure. We need a framework for more disclosure first, and basic policies on reserve management. That may require legislation. There may be ways to get there otherwise that could be explored. The Financial Stability Oversight Council could begin looking into Tether and ask for some information. The first thing, we need in a lot of these areas is simply more disclosure.
How concerned are you about all the other stablecoins out there, like USDC, or there's kind of a stablecoin boom right now? Which are you concerned about those as well?
Yeah. Well, I'm less concerned only because some of those are keeping their reserves in U.S. Regulated banks, and under the OCC guidance, those banks are supposed to be verifying the amount of reserves. So, that's better. It's not a complete framework, but it's at least better. I think, though, that we do need standards generally for stable coins to, ensure that they really are stable.
One possible approach to this problem that's being floated around is the U.S. issuing its own digital dollar, central bank digital currency that would sort of be officially backed. Do you think that this would address this problem? And in general, do you think a digital dollar is a good idea?
Well, I think a digital dollar should be actively explored. I'm glad to see that the Fed is doing that. I think there are a lot of design choices that we have to think about, a lot of issues about how do we balance privacy, for example, which is very important. We're not China. We don't want the government to be able to see everybody's transactions. But I think the day is coming when we will have a digital dollar. Now, one way you could envision that, though, is it's kind of like the Fed provides the operating platform on which private institutions build applications and sort of do stable coins on top of some kind of basic Fed CBDC. That's attractive because, look, initiative and innovation is always going to come more from the private sector than the government. I mean, that is what's great about the crypto industry is you have a huge amount of talent, huge amount of innovation going on. I have some concerns about where some of it is going, but I want to see that continue. I want to see that innovation and young people and money and talent going into the industry continue. So I think about CBDC in kind of a similar way. How do we build something that still, promotes and enhances innovation in payments and in financial services?
Chairman Massad, why do you think the crypto community is not taking this situation with Tether all that seriously, or paying, at least not as worried as much as you are? Is it that it's all smoke and no fire? We're seeing a lot of pushback. Particularly you'll see on Twitter, some people will say, well, Tether is only a couple of $1 billion are on exchanges. Most of it's used in, say, DeFi or in transfers, etc. This isn't as big of a deal. And in fact, they're even saying, well, it's going to be the reserve currency of tomorrow. What do you think is the motivation behind all of this? Are they just...
Well, that's a good question. Look, I recognize that a lot of people who are holding Tether aren't looking to convert in and out to fiat currencies regularly. They're looking more just to convert back and forth into other cryptocurrencies. And so, Tether provides that for them. And so they don't worry that much about its value in dollars. Also, maybe aren't a whole lot of other choices. But, that can change quickly. I mean, people could start to get concerned, or there could start to be a problem, and that might change. So, that's why I'm concerned.
Wouldn't they? Wouldn't they just leave Tether and just go, let's say, to another stable coin?
Well,
if there are alternatives out there.
If a lot of people try to leave Tether at once, are they going to get their money back? That's the concern. Could Tether really handle a lot of withdrawals?
Well, they haven't redeemed it. It doesn't seem like they've done much redeeming since 2018. It looks like as if, from what I've heard, is that at least it's been very difficult for people to get their dollars back already, and that's even before there's an issue of a question about the credit quality on their assets.
Correct. Look, can
you have a run on a cryptocurrency if you can't have a run on a? Can you have a run on a cryptocurrency like Tether if there is no ability to redeem anyway?
Well, but if you have everybody demanding to get out, then you've got a problem, and you're going to have a lot of people upset. And then if they have leveraged positions they're trying to cover or deal with, and they can't get the value out of Tether, then that's a problem, and that can have ripple effects. I mean, that's a concern. Again, I use the example of what happened in 2008 just to show how even a small change can trigger this kind of problem, because you had the reserve primary fund, the oldest, almost most venerable money market fund ever, that had, just barely over 1% of its assets in Lehman paper. But that spooked investors. Obviously, we were in a very scary time because it was the financial crisis. But 1% of its assets, the reserve fund, was about the size of Tether, and that led to a run on the reserve fund and then a run on money market funds generally. We don't want that kind of situation. So that's why I think, again, we need a stronger oversight, stronger disclosure, and hopefully Tether, is cleaning up its act a bit as a result of the New York Attorney investigation and other things, so that it could handle liquidations and redemptions.
If they do exit Tether, there would be a run-up on Bitcoin or other cryptocurrencies, and that would improve the price
Perhaps,
of Bitcoin.
Or maybe they'd go into other stablecoins.
Yeah, but then again, I wondered, Mr. Chairman, if the report that, I'm just speaking to the Tether proponents here, they would say that, Tether has been investigated thoroughly by U.S. officials or state officials in New York. They have to report to New York officials. Is that not enough? Is there still something in there that is not,
Right.
comfortable with you, even though they are going through this rigmarole, this due process of going through their documents?
Well, I mean, look, it's really pretty minimal reporting. I mean, with all due respect to the Attorney General of New York, they don't really have the regulatory power to impose, this kinds of standards that the Financial Stability Board, for example, wants to see all regulators all over the world impose on stablecoins, which would be much more fulsome disclosure about reserves and better reserve management. So, we don't have that. Yes, they did bring this one action. Yes, they are asking for this minimal quarterly reporting, but it's really not very much, as you all noted at the outset, with the fact that, we don't know anything about the so-called commercial paper that they have.